Okay, peeps, welcome back. So today we're going to be talking about why LTCN could be about ready to break resistance and start smashing to the upside. And we're also going to talk about the yield curve or curve yield premium strategy ETFs because they just had a dividend announcement. And I believe, if I'm not mistaken, the payment is today. So with that being said, let's get it. Okay, so before I start this video, I want to give a shout out to T Savvy EE Jaleese 1113. Hope I didn't butcher that. Sorry about that. Thank you for the super thanks, $2 donation. Really appreciate you. And you're welcome, by the way. You know, we do put in a lot of work into these videos. It's not easy to make this content. It requires a lot of research and understanding of the markets. This is very complicated stuff, but we do our best to bring you the best quality content that we can bring you. So with that being said, let's get into the grayscale trusts. We'll start with this first. So as you guys can see here, reason why I'm saying LTCN could be about ready to smash to the upside. Two reasons here. Number one, you see this previous week's candle close. If you look to the left, you can see it was actually higher than this candle close all the way back here in 2021. That indicates bullishness, and this candle did not close below there. I hesitate to say yet, but it closed above it or at it, so that's very bullish. So we're not out of resistance yet, but this candle did not close higher than the previous one, but it's also not a bearish candle. It is, there's a very long wick to the downside, which indicates that there's a lot of buying pressure, so that's good. So we'll talk about this just like we did before. If it breaks out of this resistance, it's going to move up to somewhere between around $100 to $135. That could actually happen very quickly. As you guys see back here, I mean, once we got above, well, it was already above the support, but basically once we came back and tested the support, I mean, this thing just rocketed straight up. You're talking like 1, 2, 3, 4, 5, 6, only 6 weeks to get all the way up to the highs, which is at $510. So very, very fast, swift, quick movement here. There's a possibility it might maybe get stopped like right here before it goes higher at $76. But even with that being the case, I mean, it still would nearly triple in price. So that's something to keep in mind. But as of the near-term technicals, I would still say that this is resistance because it has not had a body close above it yet. We want to see like a green candle close, poke, and close above this zone here. And until we get that, we can't officially say, okay, there's a chance this could turn into support and move higher yet, although it's looking more and more likely like that's going to happen. So the current support is still going to be roughly about 1270 to 1470. Current resistance is going to be 2350 to about $27 or so. And you guys can see that the EMAs are lining up nicely with the support and also these candle tops here, right around that $16 mark. So this trend line, which was trending down before the breakout, is also kind of in that zone. So a lot of very bullish confluence there. And you have this macro trend line down here at the lower support. That's right around $7 to $8. But with all this confluence at this green zone right here, I doubt it's going to go lower than that, but we'll just have to wait and see. So in terms of bullish bearish scenarios, if it pulls back from here back into the resistance, it could be as much as a 46% drop. What's interesting is native crypto has actually been selling off. As you guys can see here, it is kind of selling off at this point, but the LTCN trust has not really moved. So that is pretty curious. Now, if you waited to get back in at roughly around the support zone and rode the move up, it'd be somewhere between 63 to 90%. We do still have our positions, just so you all know, nothing's changed, and we have been buying ETCG every single day. So we will actually be showing you that on Sunday. So here's a BCHG. This is a hammer candle. So a hammer candle is basically defined where the body closes at the top of the candle. It's a green candle, and the wick is at least 3 times larger than the body. What does that mean? Basically, you could fit 3 of these candle bodies within this one candle and still have a little bit of wick to the downside. That's a very bullish candle sign. It's also a very bullish candle itself. So as you guys can see, it did close slightly above this previous candle here. Definitely expecting some serious moves up on BCHG next week, that's for sure. So as of right now, the current resistance is still between 1020 to about 1250 or so, 1270. Support below that is $7 to $7.50. If we get above that resistance, the next level will be $18 to about $20. So pretty big move up. If it goes up to the next resistance, you're talking roughly a 2x. Now, of course, both scenarios here, if it pulls back to the EMAs and the support, that's about a 34% drop. If you decided to wait to get in at support and it rides all the way up, you'd be getting about 50 to 85%. So HZEN, this one is looking like it might be resistance turn support. It's actually looking quite bullish, if I'm being honest. So we had this candle breakthrough, came back, tested, did not close below the then resistance, and now it looks like we are trying to move back up. So I would say this area here has now turned into support. The $7 to $8, again, we need to see a candle close above this support zone out of the box to confirm that, but it does look bullish. And the resistance zone is basically 1130 to about 1250 per share. So if you got in now, which this is at support, it'd be roughly about a 47 to 58% move up. But if the inverse happens where it drops back down to the previous support, well, it's going to be a pretty nasty drop. It'd be about 50%. And that zone is roughly about $4 or so. And it lines up perfectly with the EMAs. Plus, you also have these candle bodies here. So pretty strong confluence down at that level. So ETCG, this is also another hammer candle, as you guys can see, although this one did close red. So there's that. I wouldn't say it's, super bullish, but it is still kind of bullish. Very clear buying pressure off these EMAs here. As you guys can see, we ourselves were buying as well while the price was down. So this zone right here between $13 to $16 is very clearly support. As you guys can see, we busted out of there, closed above the green box, and then came back down, retested, and now we have this wick support here. We just need to close back above it, and that will be the full confirmation. And resistance is between $17.60 to $20. So another thing to point out is the EMAs are sitting right around this channel and also pretty close to this support zone. So I would say that this green box here is most definitely, of course, not 100% guarantee, but very, very likely to hold, in my opinion. So if you decided you wanted to get in now, you'd be looking at about 17 to 35%. If you decided you wanted to wait and say, well, I'm going to wait for it to go back to that channel, that's entirely up to you. You'd be looking at about 44 to 65%. And likewise, if it does come back down to the EMAs, it could be anywhere between 16 to, I'd say, as much as roughly about 31%. So decent drop, but not nearly as big as it would have been for HZEN. So GXLM, this one's looking very bullish. This kind of does look like a tweezer bottom here, except you have wicks on both sides. So these are both indecision candles. What an indecision candle basically is where you have a large wick on both sides. So even though it is green and the bulls technically won for the week, it is still indecisive. So I would say current support or resistance is still resistance, so 53 to about 58, and support could be roughly, I'd say, somewhere around these EMAs, so 27 to as high as 41. Pick your poison as to where you want to get in. So if you waited for a pullback, it'd be about 56 to 73% move up. And if it drops back down from the zone to the EMAs, could be as much as 50%. So again, there is some risk there. Just understand that. So ETH, we have not seen a play out of the cup and handle yet, although it does look like it might be wanting to come down into that kind of a channel that we drew here. So this candle tells me very clearly as a big red candle that closed below the what would have been support zone here. It could be very clearly be bearish based on the fact that it closed below that. The only bullish thing here is that it's still above the EMAs. So again, kind of an indecision going on here. So resistance between 25 to 28. I would say the support is going to be this little zone that we have here in between the EMAs. So somewhere between 1720, you could potentially say that support is also here at 2170. So if you waited to get back in at the zone, you'd be looking at roughly about 45% to 65%. And if you rode it all the way to the peak where the highs are, roughly about 103%. So pretty good move there. Zcash, this one is also kind of indecisive looking. This is actually a really weird candle formation. I don't think I've ever seen something like this. So it's all I can say about this is the selling pressure here does appear to be greater than the buying pressure. So, and we are below the resistance zone. That's something to keep in mind. So this is still resistance between $7.30 to $8. Support down at $4.40 to about $5. If it was me, I'd wait for a pullback, but you can get in whenever you want. It's up to you guys. So 56 to 73% would be the move. We do have some of the underlying token of the Zcash Grayscale Trust, just so y'all know. So GSOL, it does appear that there's some buying pressure coming in off these EMAs, but the bears did manage to get a lower close on this candle. So if I was in this trade, I would just simply wait. Or if I was going to take this trade, I would wait for it to pull back into these EMAs to potentially reduce risk, because there is still a possibility that it could dump. And the native cryptocurrencies are dumping right now. Just to get back into that zone is about 52%. So the zone is 176 to about 204. And the peak up here, as you guys can see, is massive. It's $575. So that move would be about 194% on GSOL. Mana, very, very indecisive candle. That's almost a perfect, literally almost a perfect indecision candle. It's kind of crazy. But so we had this massive bearish candle and then kind of indecision here. So we don't really yet know what's going to happen. I would say at this point, maybe a pullback is due. So the current support is 17 to 2050, and the EMAs range from $13.70 to about $29. I would say getting in the middle somewhere would be good, just as kind of a conservative bet in case there is a big pullback. So 305% roughly is what you'd be looking at. But you guys can, you can play this however you want to. It's up to you guys how you want to do this. I'm just telling you guys what I see on the charts. So this candle is equally bullish and bearish, I would say. It's a big fat red candle, but it has a long wick to the downside, indicating bull and bear pressure, which means that the bulls and the bears are fighting each other on this particular weekly candle, with very clearly no clear winner, as I can see. So we're still above the EMAs. If this thing pulls back into the EMAs, if I can get a measurement here, it would be a pretty nasty drop. So just to get to the middle would be about 57%. To get to the bottom would be really, really big. It'd be 73%. I would still say a good place to pick up would be right around the top of these candles. That's just my opinion. So roughly about $10. Maybe start scaling in at 14. But if you manage to get in somewhere in there and it moved back up, it's a huge 163% gain. So big move there. So support here is 66.50 to 85, and the top is at 220. It's just kind of sitting on the EMAs at this point. It may come down a little bit more. It's hard to say right now. So if you waited to get in on the dip and sold at the top, it'd be roughly about 189%. Phil G, this is a very small, very, very small red candle. You almost can't even see it. But this so there was it appears that so there was no gap, but it just kind of opened. It just kind of bobbed around. So there's a possibility that this thing may actually move lower next week. We'll just have to wait and see. That's kind of what I'm seeing here. But if it does move lower, I mean, the move could be as big as 68% or as small as 13%. I would say probably getting in starting at around $110 might be a good entry, maybe all the way down to 85. So if you got in somewhere down in there, you could be looking at as much as 350%. That's a big, big gain. GLIV is very, very, very bullish. So this is about as extreme of a hammer candle as you could possibly get. As you guys can see, the wick is extremely long here. So this probably is going to move higher next week. And you guys can see it bounced almost perfectly off these candle tops here. So if it does come back down, maybe look to get in somewhere around 26, which is also at that blue EMA. And the support zone below that is 15 to 12.25. So from that $26 level all the way to the top at roughly about $80, this would be a 200% gain. So there's a couple of more things I want to mention before we get into the curve invest. So the first thing is we go over here to Bitcoin. You can see it's pulling back. I would still argue that, a pullback is necessary and even healthy in Bitcoin because we just went up too fast in too short of a period of time due to the spot Bitcoin ETFs. Why would this be a good thing for a pullback? Well, basically, if we pulled back and had consolidation for say 3-4 months, something like that, that would be good because it would de-risk crypto a little bit, which would allow the crypto bull run to go on for a longer period of time. I'll put it to you guys like this. Look, if we just keep going to the moon for, on and on and on with no pullbacks, the crypto bull run could be over in like 3 months. Okay. 2-3 months, something like that. We don't want to see that. We want the bull run to end by the end of next year, according to the cycles, because it gives people more time to accumulate, more time to take profits over a long period of time, more time to strategize and plan out for these things. So I would say that pullbacks are definitely healthy. I mean, as you guys can see, the red EMA is still all the way down at 40,000. Haven't seen a death cross on the MACD, so that's good. That would be a major warning flag for us, but maybe like a slight pullback and just kind of chopping around while the EMAs take time to move up and then the altcoins can explode to the upside would be good for Bitcoin, in my opinion. And in order for these grayscale trusts and the altcoins to really start popping off, like seriously start moonshotting, not these little moves that we've seen so far, Bitcoin needs to go into a consolidation phase. It has to, because that is typically when the altcoins start exploding to the upside. Like we've told you guys on this channel for eons, the way it usually works is Bitcoin hits its peak, then it chops around a little bit, then Ethereum hits its peak, and then altcoins take off very, very shortly after Ethereum hits its peak. This is usually how it works in crypto, but for that to happen, Bitcoin has to chop sideways, and some of that money from Bitcoin needs to flow into the altcoins. So I'm going to reiterate this on the Bitcoin dominance, and we'll get more into this in a different video, but like I said before, guys, as soon as we get a crack out of this wedge and basically so this resistance is holding, right? This red box. As soon as we get a close below this white line here, as you guys can see, is held for eons since basically November 2022. Once we drop below that, that's when altcoin season starts. That's when these grayscale trusts are really going to start taking off. As you guys can see, something very similar happened back here in January. When did Bitcoin hit its all-time high? In January. Okay. So we'll just go back to Bitcoin real quick. I don't want to go over this too much, but as you guys can see, in January, well, actually even before January, so in December, Bitcoin hit its all-time high, but the Bitcoin dominance didn't start falling until roughly about January, February. And once we got this chop here in the beginning of 2021, that's when altcoins started exploding. And I'll show you guys back here on the charts real quick before we get into the curve invest. So you can see once we cross down below this green line, The Bitcoin dominance really fell off a cliff here. Basically, for that 4-month stretch while Bitcoin was going up and then topped out, money flowed massively out of Bitcoin into the alts, which is exactly what happens when the Bitcoin dominance goes down. When the Bitcoin dominance goes down, money flows out of Bitcoin to the alts. When it goes up, money flows out of the altcoins into Bitcoin. That's usually how this works. So what we're looking for here is a break down below this white trend line here, below the EMAs. As you guys can see here, we kind of chopped at the EMAs and then boom, sold off. This was in March of 2021. So March to May, that's when altcoins started popping off. And then we want to get like maybe some kind of close below the support zone here too. Then alts will fly, grayscale will fly, so on and so on. So now let's get into Curve Invest. So the payment date is today, actually. Yeah, so declaration date was on the 19th. The next ex-dividend date is on the 24th of next month. So not to fret, guys. You have a whole another month to accumulate this if you want. So 51 cents or 52 cents basically on TSLP, which is the Tesla version. We have 5 shares of this, so we get like $2.60 or something like that on a monthly basis. So not bad. So they have 6 out of the 7 Mag 7 companies. As you guys can see here, the only one they don't have is NVIDIA. So NFLP, this is Netflix, 47 cents. MSFY, if I can find it. So basically 28 cents and 2/5 of a penny, or 1/5 of a penny. So 0.282 per share on MSFY. So let's see if I can find the other ones. Okay, so this one is, which one is this? So this is a Google one, 28 cents, almost 29 cents. As you guys can see, it was much higher than the previous month, so that's always a good sign. One thing I do like about these dividend paying ETFs is they're relatively consistent, and the price doesn't get completely demolished when the markets go down like the Yield Max ETFs do. So there's pros and cons for both. We still love the Yield Max ETFs, but that's just something to point out here. So 23 cents on the Apple one, and the last one is Amazon. So Amazon payout was pretty good, 35 cents per share compared to, well, slightly down on the month compared to last month, but compared to the other months, still pretty good in comparison. Anyways, this is the update for the Grayscale Trusts and the Curve Invest dividends. Hope you all enjoyed this content. Please like, comment, and subscribe, and we will see y'all later. Peace.